What is going on, traders? Welcome back to the Traveling Trader. Here are 3 things that you must know regarding the market this week and frankly for the rest of 2021. As the number of analysts who are predicting a market crash continue to pile up, I hope to provide you some context as well as some boundaries for you to operate within. And as earnings season approaches, I'll also be giving you an update on some plays that we're currently in, as well as some plays that we are looking into to give you some ideas. And if you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think the prospects are of an imminent market crash. And as always, subscribe to the channel for the most non-BS, concise, regular market info. And let us get right into it. So what are the 3 things that you must know right now? Number 1, what are the Fed-related updates going on this week and how might they affect the market? Well, we are looking at the CPI data for June that is going to be released today, July 13th at the time of this recording. The consumer price index will give us an idea for how aggressive or how tame the inflation situation is based on rising or falling prices. Now, the last time this was released on June 10th, the market actually had a green day because the data showed that the economy was actually slowing down after its hyper boom coming out of the pandemic and prices were starting to drop. If you look all across the board in terms of commodities, prices have dropped from their all-time highs or from their recent highs. So look for that narrative to continue. And if we see that, we might not see a bond sell-off. We might actually see more of an influx into bonds because the market is interpreting that inflation is no longer a threat in the short term. And if inflation is no longer a threat in the short term, then bond buyers are more than willing to buy bonds, which are considered the safest assets currently in the US market. And the more that the market buys bonds, the more that the rates drop, the better that is for the price of growth stocks. And tomorrow, July 14th, we will hear testimony from Jerome Powell, where he will likely be talking about the CPI numbers that are released today and what that means for the Fed's actions or inactions. In my view, if bond yields continue to drop, then the Fed will start talking about tapering. If they start talking about tapering, then the bond yields might rise once again. That is why you have financial analysts and authors like Harry Dent, saying that we are likely to see some sort of crash by the end of this month. If not by this month, then at least by September. Because if the Fed starts tapering, meaning they slow down on bond and asset purchases, and the economy stops growing at the rate that it was post-pandemic, then that is a recipe for short-term disaster. Does that mean you should stop investing in the market? Hell no. There are many opportunities. There will always be opportunities. And through options, you can even play either side of the coin. However, that does not mean that you should stop investing, because if we take a look at a chart, and this is some perspective that I wanted to show you, let's take a look at the S&P 500. Every crash in history, this is the weekly chart, used to be an all-time high at one point. Even the COVID crash in March 2020 was the high in 2016, not that long ago. And that is the story of the stock market going all the way back to the Great Depression. All right, storyline number 2 that you should be following this week is the China Fud. This seems to be a recurring theme ever since Chinese companies started being listed on US exchanges. However, time and time again, these headlines prove to be temporary and actually a lucrative opportunity to invest in Chinese mega cap tech companies. However, do what thou wilt according to your risk tolerance and your due diligence. I know quite a few traders who don't feel comfortable investing in anything Chinese, including NEO, regardless of the opportunities that it presents them. So China has once again declared that it is cracking down on stocks that trade on US exchanges, stocks like Baba, Baidu, and they are blocking a Tencent approval at the moment. However, right at the time of this recording, news came out that China has actually approved Tencent's deal to take Sogu private. And because of that, we see Chinese tech stocks flying pre-market. Baba is up $5 pre-market. Baidu is up $4 pre-market. And if you're a part of the private trading group or you've seen my previous videos, I've talked about Baidu being a buy here at the 300-day moving average if you have room in your portfolio for a little bit of a risky play due to the China Fud. We even opened a Baidu bullish diagonal spread yesterday for the 175, 180 strike prices that should be up today at market open. It continues to be my view that China Fud is just that. It is temporary Fud, an opportunity for us to get into mega cap Chinese tech companies. Obviously, again, do what is good for you. However, in my portfolio, there's definitely room for a riskier emerging market / Chinese market opportunity. And I'm okay investing a small portion of my portfolio in the Chinese market, especially at these major discounts here. And I'm looking at an ETF like KWEB, which is an ETF that deals in Chinese mega cap internet companies. All right, and number 3, what you should know about the market this week and for the rest of 2021 is it is officially the beginning of Q2 earnings season. This is where companies report their earnings from Q2. It starts in July. You could take a look here at the condensed list of companies that are reporting earnings in July and August. Obviously, some of the biggest names on the planet. We have Netflix, Chipotle reporting on July 20th, IBM reporting July 19th, Coca-Cola, Verizon reporting on the 21st, Facebook and Ford on the 28th, Apple, UPS, Visa on the 27th, so on and so forth. Follow Earnings Whispers on Twitter, one of the best earnings resources that you'll find. As always, I will be posting my risky earnings trades in the Discord. We recently bought Disney in the 170 range after it fell to almost the 200-day moving average, predicting that we might see a run up before earnings due to some of the titles that it has in the box office, as well as some of the Disney Plus numbers that are coming out. Disney is currently rocking. It's at $185, breaching the 100-day moving average here, and I can easily see Disney breach the $200 mark by the end of the year. Amazon is reporting towards the end of the month, and I did say that I think this time we will break out of this resistance due to the momentum and the volume pushing leading into the next earnings round. The fact that Jeff Bezos stepped down, there's a new CEO, and it continues to crush earnings regardless of whether we are in the pandemic or not. We have the 39.50 4,000 call spread on Amazon, which we will likely sell early, and we also have a bunch of plays on the banks as they pass the Federal Reserve stress test with flying colors, and they will likely continue to rip earnings going into 2022 and 2023, especially if we see an interest rate hike next year and beyond. Keep your eye out on Clove and BBBY for the rest of the week for potential short squeezes, and I'm curious to see what CCIV does ahead of its merger with Lucid. Anyway, traders, that is it for this video. If you want access to all of our trades, link is in the description below. Very easy if you click it. Come be a part of the community. We have thousands of members there. We'd love to have you. If you get anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think the chances of an imminent market crash are and what stocks you are currently playing and would like me to cover. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.